Good morning and welcome to the first episode of our XM.com weekly market update for 2025. And Pete, welcome back.
Good morning, Andrew. Happy New Year.
Happy New Year to you as well. Interesting couple of weeks.
It has been showtime. I think the volatility that we've seen in bond markets, currencies, commodities, you name it, and of course equities, has just been off the charts. And that Santa Claus rally didn't materialise.
No, it didn't.
And then, the early part of January, I thought maybe it's going to be soft. We're 6 days out from President Trump's inauguration. And for any trader out there, if you haven't made $1 in the last 2 weeks, look at the market closely. You're doing something wrong.
Yeah, for sure. There's plenty going on.
Because there's breakouts.
Yeah, that's right. And I think that Santa Claus rally, it's probably not unsurprising considering how strong the year was anyway. And
Agreed.
It ended up being some pretty big numbers. Yeah, but it did peter out in that last week of December for sure.
Yep.
But we'll look at some of the numbers here. There's plenty going on. First of all, domestically, the Aussie dollar under a heap of pressure, as are other currencies.
Yes.
I think with the Aussie as well, a lot of pressure on the Reserve Bank to potentially drop interest rates on the back of the economic conditions.
Yes, but inflation is very sticky.
It still is. A lot of pressure there. But if they were to drop at some stage, what does that do to the dollar here?
It's a 58 handle. Everyone's saying that it's got the potential. I mean, that trade there, Andrew, is incredible. And that you could roll that across to pound, euro, yen, any currency, New Zealand dollar, Canadian dollar. So, that from a trading perspective, in that probably 10 week period, it's since the middle of October, US dollar's gone to the moon, and there's every chance you're going to see parity for the euro. 102.
I know. Pretty crazy stuff. So there's plenty of risk on the downside there for sure.
Yeah.
So, and obviously what impacts us a lot here in Australia is China. The CPI number came out as 0.1. That chart there is a 5-year chart, so it takes us back to pre-COVID.
Yeah.
But it's a pretty damning sort of chart considering they were
5% growth.
Supposed to be the next big thing.
Yep. And the other side of it is that the 10-year Chinese bond is sitting, every chance you're going to see 1.5% sometime this year. And the differential, it was over 3%, now it's about 3.4%. So the differential, it's the largest in history from a 10-year yield in US versus 10-year yield in China.
Yeah.
And risk-free, you're going to punch money into the US. You're not going to put money into China.
No chance. So, but they're pretty damning numbers there. US, plenty going on in the US.
That was surprising.
Yeah, a big number. Once again, we spoke about it, I don't know how many times last year, just that resilience of the US economy and the non-farm payrolls. That it was quite a bit to the upside. It was about 100,000 over, I think, the expectation. But still, and the unemployment rate actually came down.
Yes.
0.1 of a basis point. Yeah. Incredible.
You've got seasonal demand from an employment aspect, over the Christmas period. There were analysts out there saying you're only going to see 80,000, and then, a large percentage. And then you saw the other side, 140, 150, and as you said, it shot the lights out at 255 or so. A lot of part-time jobs created, short-term workers, but again, you still saw strong numbers. And what does that do to Fed Chair Powell? And where is he playing as far as a rate cut in the States?
Yeah, well, that's the big question now. Will there be? Though he said basically there was going to be 2 this year, which got pared back from 4.
Yep.
So the market didn't like that, obviously. The irony here, though, is that if you look at the rates now, we look at the 2s and the 10s, which has been, we'll touch on this a little bit more shortly, but the irony is the economy's strong, the consumer seems okay, inflation is potentially it could rise.
Yes.
The CPI is out this week as well.
That's right, yep. So it's very sticky, it's going up.
Yeah, do interest rates pop back up? But the reason for that is because it's a strong economy.
Yes. But, you put your mind back to September, and that's when they had their first rate cut, 50 basis points, and you were saying, man, we're going to see 5 rate cuts by the end of 25. You saw a couple, and then all of a sudden, there's every chance you're only going to see 1 this year. They're saying it could be December now. They might roll that forward. If these numbers, and that continues to rise, that 10-year yield, I mean, there's no way you're going to see a rate cut.
You wouldn't think so, no. Not anytime soon.
And what does that do to a new administration with President Trump? And we all understand that he wants cheaper rates.
Well, he wants cheaper rates, but he's talking about all these tariffs, which are inflationary, and he's, there's all this stuff going on now with the Panama Canal and Greenland, all this other
Canada.
all this other talk, which the financial markets won't like.
No, well, they don't like
because
unknowns.
of the uncertainty. I know, and I think there's no doubt that I think everyone knew that he was going to govern in a very different way,
Unorthodox.
But that I suspect will create a lot of volatility this year, which is good for the traders out there.
Yep.
But yeah, the 2s and the 10s, it's pretty incredible.
Well, just, for our viewers out there, and you're a bit of an expert in this, you put your mind back to October and what you've seen from a 2 and a 10 year and explode to the upside 4.78 for the 10 year. They're saying it's going to be a 5% yield very, very shortly. Can you see 5%?
I think you can. And you might see not a huge jump because the interest rate markets don't jump around a lot on a day-to-day basis.
Sure.
But if you get a bit of a higher CPI number this week, that'll be clearly closer to, maybe not 5, but it'll be close to 4.9.
Yeah.
So,
and that's a dramatic increase since October.
It is. Well, that's nearly 1.1%.
Yes.
In a falling interest rate environment.
Probably more, 1.3. It nearly touched 3.5.
Yeah, it's closer to 1.3, yeah. So, in a falling interest rate environment.
So these are the factors to our viewers that you need to be conscious of when you're looking at bond yields, currencies. You've got a very strong currency market. Naturally, you've got inflation concerns, unemployment with the non-farm payroll, and the price we haven't touched, and we'll look at that later in the month, gold, and crude oil.
I know. But if that CPI was to jump, then there's an expectation of higher US interest rates probably later this year. How about the US dollar then?
It's probably a 112 handle. And what does that do to the Aussie?
And the other currencies, yes. Yeah. I know. And just a much shorter
And then
term,
you roll some tariffs on top of that.
Yeah, well, the tariffs might get
watered
put
down
off for a while. So if they come in at all. This is much a short-term chart from end of November, but that just gives a bit of a snapshot of what that 10-year is doing across multiple economies. So
yeah, that is just mind-blowing.
And finally, oil, once again, it's jumped in the last few days on the back of this talk between US and Russia. Now, once again, this is a 3-year chart, which probably puts it into perspective, as in, even though it's jumped in the short term, it's still at pretty low levels.
You've got to, exactly, and building on what you just mentioned as far as Russia, is this the last hand grenade thrown out by the Biden administration against Russia, considering you're 6 days out from the end of your term, and all of these factors now starting to, I suppose, cause confusion to the energy markets. Over that Christmas period, I was more erring to the 65 handle because these are unknowns. We didn't know that this was going to happen. And it was very much like, it could be a 65 there. There was structural softness, US dollar going up. Energy markets could have just taken a nosedive. And I think a lot of analysts were really going, well, if you don't see anything wild card thrown in or a hand grenade, it's got 65 written on it for WTI.
Yes.
And now you've got, the best part of, I don't know, maybe an 80 for WTI in the short run. You've got NYMEX, you've got Brent there, as you said, at 81.
Yeah, well, that's right. And the WTI, that was trading at that, 67, 68 mark. So they were very low levels, but But once again, this is just another thing adding to the mix.
Well, this spurs inflation no end.
Yeah, for sure. But just the volatility as well.
Great market to trade.
Great traders market, no doubt about that. So plenty going on, plenty of data coming out this week as well.
Big week.
So we'll keep an eye on that and discuss that next week.
Yeah, keep an eye on the UK. Is it a Liz Truss moment? What's happening as far as the Starmer administration? What's happening in France, Germany, and of course the Eurozone from a growth perspective, PMIs, all of this we'll discuss over the next matter of weeks. But strap yourself in. It's going to be one hell of a ride.
Big start to the year.
Yeah, 2 weeks in.
Good stuff. All right, Pete, welcome back.
Thank you, Andrew.
We'll catch up next week.
Look forward to it.
And that's the XM.com weekly market update.